Have you ever wondered why Procter & Gamble is considered a dividend aristocrat? Well, let's dive into that. The term dividend aristocrat might sound like it belongs in a history book, but it's actually a title of honor in the world of investing. Dividend aristocrats are the crème de la crème of the S&P 500, a select group of companies known for their reliability and consistency in paying dividends. These are the companies that haven't just paid dividends, but have increased them for at least 25 consecutive years. Yes, you heard that right, 25 years. It's like a badge of financial stability and resilience. Now, you might be wondering, what's so special about dividends? Well, dividends are a way for companies to share their profits with their shareholders. It's like a thank you note for your trust and investment. And consistent dividends. They're an indication of a company's financial health and its ability to generate steady profits. This brings us to Procter & Gamble, a familiar name in most households and a staple in the consumer goods industry. With an illustrious history spanning over 180 years, Procter & Gamble has not only paid dividends, but has increased them for over 6 decades. That's right, over 60 consecutive years. That's more than double the minimum requirement to be a dividend aristocrat. It's a testament to the company's robust business model and its ability to navigate through economic ups and downs. But being a dividend aristocrat is not just about the past. It's a promise for the future. It's a commitment to shareholders that the company will strive to continue its dividend growth, come what may. It's a reflection of the company's confidence in its business and its strategy. So Procter & Gamble, with its consistent dividends, is indeed a dividend aristocrat. It's a testament to the company's resilience, strength, and its commitment to rewarding its shareholders. But like any investment, it's important to delve deeper, to understand the company's history, its financial performance, and its future prospects. And that's exactly what we're going to do in the next few scenes. So stay tuned. To understand why Procter & Gamble is a preferred choice for many investors, we need to delve into the history of the company. The story of Procter & Gamble, or P&G as it's commonly known, began in the mid-19th century. It's the tale of 2 immigrants, William Procter, an English candle maker, and James Gamble, an Irish soap maker, who married sisters in Cincinnati, Ohio. The brothers-in-law decided to pool their resources in 1837, and thus, Procter & Gamble was born. In its early years, the company was merely a small, family-operated soap and candle company, but the winds of fortune were in P&G's favor. During the American Civil War, the Union Army contracted P&G to supply its soldiers with soap and candles. This contract not only boosted the company's profits but also its reputation, establishing P&G as a reliable supplier of essential goods. As we fast forward to the 20th century, P&G continued to thrive and expand. Innovation became a cornerstone of the company's ethos. In the early 1900s, P&G introduced the world to the concept of brand management and launched its first synthetic detergent, Dreft. This was followed by the iconic Tide in the 1940s, which revolutionized the laundry market. P&G's growth wasn't just product-centric. The company expanded its footprint globally, starting with a manufacturing plant in Canada in 1915, and eventually spreading its wings to Europe, Asia, Africa, and the Middle East. Today, P&G operates in more than 80 countries around the world. Key milestones in the company's journey include its listing on the New York Stock Exchange in 1891, the establishment of the first overseas subsidiary in 1930, and the achievement of $10 billion in sales by 1980. Notably, P&G has been a part of the Fortune 500 list since its inception in 1955, consistently ranking in the top 50. This is a testament to the company's enduring success and robust business model. From a humble beginning, Procter & Gamble has grown into the global powerhouse that it is today. Its history is a testament to the power of innovation, strategic expansion, and brand management. This is the legacy that makes P&G a compelling choice for investors seeking long-term value. A company's financial performance is a key factor in its attractiveness to investors. So how does Procter & Gamble fare in this regard? Let's delve into the financial health of this consumer goods giant. Over the years, Procter & Gamble has consistently demonstrated strong financial performance. This is reflected in key financial indicators such as revenue, net income, and earnings per share, all of which have shown an upward trajectory. Revenue, the total income generated by the sale of goods and services, is a primary indicator of a company's financial health. Procter & Gamble's revenue has been on a steady incline over the years, showcasing the company's ability to generate healthy sales despite market fluctuations. This is a testament to the strength of their product portfolio and their market presence. Next, let's examine net income, the company's total earnings after subtracting all expenses. Procter & Gamble's net income has also been on the rise, indicating its ability to manage costs effectively and generate profits. This is an important factor for investors as it reflects the company's profitability. Finally, earnings per share, or EPS, is another key financial indicator. This is the portion of a company's profit allocated to each share of common stock. A rising EPS indicates improving profitability and is often seen as a positive sign by investors. Procter & Gamble's EPS has consistently grown over the years, further signifying its strong financial performance. Of course, these are just a few of the many financial indicators that investors consider. Others include cash flow, debt levels, and return on equity, among others. However, these three indicators, revenue, net income, and earnings per share, provide a good snapshot of Procter & Gamble's financial health. So, what does all this mean for potential investors? Well, in simple terms, Procter & Gamble's strong financial performance suggests it is a financially stable and profitable company. This makes it an attractive option for investors looking for a reliable and potentially lucrative investment. Clearly, Procter & Gamble's strong financial performance makes it an attractive option for investors. But what about dividends? After all, Procter & Gamble is a dividend aristocrat. One of the most appealing aspects of Procter & Gamble as an investment is its rich dividend history. The company is part of an elite group known as the Dividend Aristocrats, a select group of companies in the S&P 500 index that have increased their dividends for at least 25 consecutive years. In fact, Procter & Gamble has done more than just meet this threshold. The company has an incredible track record of paying dividends consistently for over a century, and it has increased its dividend annually for more than 6 decades. This consistency in paying dividends is a testament to the company's strong financial health and its commitment to returning capital to shareholders. It's also indicative of the company's confidence in its future growth prospects. After all, a company wouldn't consistently raise its dividend if it didn't believe it could afford to do so in the long run. In terms of dividend growth, Procter & Gamble has demonstrated a steady upward trajectory over the years. The company's dividend has grown at an average annual rate of approximately 6% over the past decade. This growth rate might not seem staggering at first, but when compounded over time, it significantly enhances the return on investment for shareholders. Moreover, Procter & Gamble's dividend yield, which is the annual dividend payment divided by the stock's price, has consistently been above the average for the S&P 500 index. This means that investors in Procter & Gamble not only benefit from a steadily increasing dividend, but also receive a higher income return on their investment compared to the average S&P 500 company. So, when we look at Procter & Gamble's dividend history, we see a consistent, reliable dividend payer that has continually rewarded its shareholders. The company's ability to maintain and grow its dividend over such a long period of time is a testament to its financial strength, its successful business model, and its commitment to its shareholders. Procter & Gamble's impressive dividend history only adds to its appeal for investors. Now let's weigh the pros and cons of investing in Procter & Gamble. On the plus side, Procter & Gamble is a dividend aristocrat, a title bestowed on companies that have consistently increased their dividends for at least 25 years. This makes it an attractive choice for income-focused investors. Moreover, P&G's extensive and diverse product portfolio, which includes household names such as Gillette, Tide, and Pampers, provides a stable revenue base, even in turbulent economic times. However, it's not all sunshine and rainbows. The company operates in a highly competitive market and faces stiff competition from both established players and emerging brands. This could affect P&G's market share and profitability. Furthermore, being a multinational corporation, P&G is exposed to risks associated with currency fluctuations and geopolitical uncertainties. As with any investment, Procter & Gamble comes with its own set of advantages and disadvantages. It's up to you, the investor, to decide if the rewards outweigh the risks. As we've seen, Procter & Gamble is a dividend aristocrat with a rich history and strong financial performance. This company has been a mainstay in households worldwide, showcasing its resilience and adaptability over the years. Its financial performance remains robust, with consistently rising dividends that make it an attractive option for income-focused investors. However, like any investment, it's not without its risks. Market volatility, competitive pressures, and changing consumer trends can all impact the stock's performance. Therefore, it's crucial to do your own research and consider your financial goals before investing. Remember, investing isn't just about chasing the highest returns. It's about building a diversified portfolio that aligns with your risk tolerance and long-term objectives. Procter & Gamble could be a valuable addition to your portfolio, but it should be one piece of a larger investment strategy. Don't forget to like, share, and subscribe for more insightful videos like this. Until next time, keep investing wisely. The information provided in this video or communication is for informational and educational purposes only. It is not intended as and should not be considered financial, investment, legal, or tax advice. The content is based on general principles and may not be applicable to your specific financial situation or needs. Always consult with a qualified financial advisor, accountant, attorney, or other professional before making any financial decisions or taking any actions related to your finances. Any investments or financial decisions you make are solely your responsibility. Past performance is not indicative of future results, and there are no guarantees of any specific outcomes or returns. While every effort has been made to ensure the accuracy and completeness of the information provided, we do not warrant or guarantee its accuracy, reliability, or suitability for your individual circumstances. We do not endorse or promote any specific investment products, services, or strategies mentioned in this video or communication. Any references to such products, services, or strategies are for illustrative purposes only, and do not constitute a recommendation or endorsement. You should conduct your own research and due diligence before making any financial decisions. In summary, this video or communication is not financial advice, and you should not rely on it as such. It is essential to seek professional advice tailored to your specific financial situation and goals before making any financial decisions or taking any actions.